Today, I'd like to introduce you to a relatively new policy, disability type policy in the marketplace today, and what we refer to as business loan disability insurance. Now, remember, once again, it's for business purposes. So because it's for business purposes, once again, the definition of disability is own occupation. Always remember that whenever we're talking about a business, it's always an own occupation definition, not a regular or any occupation or anything. The purpose really of business loan disability insurance purpose is to make a loan payment. In other words, you borrowed money, okay, you become disabled, who's going to take care of that loan, essentially, okay? So you have those monthly payments, whatever it is, you have a commitment that's been made. The creditors, of course, want their money, and regardless of the fact you're disabled, they really don't care, let's say. So we just want that loan payment. And so you can buy a loan, basically business loan disability insurance to make those loan payment. Now, in order to qualify for that, okay, in order to qualify for business loan, first of all, the loan has to be essential to the business. In other words, it is crucially important that the money is going to be used for the expansion of the business, okay, or the maintenance of the business. So this is not your borrowing money so you can take a holiday. This is to borrow money, basically, that you're going to plow back into the business to maintain the business, to expand the business, whatever the case may be. Okay, so it is essential that you get this loan to cover off those expenses. Okay, and because it is a business loan, then the interest will be deductible. Okay, always remember that if you spend money to make money, then whatever the interest component of that loan happens to be, whatever that interest happens to be there, it will be deductible as well. So the interest has to be deductible, and the loan itself, the actual loan itself, can only be purchased from a bank, a trust company, a credit union, or a loan company. In other words, this is not a situation where you can go to a friend, for example, and borrow money from them, and you can buy a business loan type policy. No, it has to be from a organization or institution, basically, that is in the business of making loans. So it has to be a legitimate loan from a legitimate organization, and the end result is obviously you go to the bank, you go to a trust company, a credit union, or a loan company. That's their business. That's what they do for a living, basically. And so therefore, those are legitimate businesses. If you go to a loan shark, you go to money laundering, all that stuff there, or a friend to borrow money, this will not cover you for that. So it has to be a legitimate type of loan. Okay. The benefit, obviously, is, in other words, when you become disabled, and once again, you can have the usual 90-day waiting period, 60-day waiting period, all that sort of thing there, is that it will make periodic payments. Okay, so up to usually around $10,000 a month, so every month it will just keep on making those payments on your behalf. Or sometimes what can happen, again, you have to look at the company, they may actually have a lump sum. And it could have actually both. You can have periodic payments for a period of time, and then toward the end of the loan period, they basically do what's called a present value calculation, and they just pay the rest of it off. So it all depends, again, on the wording of the contract. But it does make periodic payments, and it also could make a lump sum payment. Usually the lump sum payment is no more than about $250,000, and the periodic payments is no more than $10,000. But again, that's not etched in stone. You have to look at your contract, but you get the idea in terms of the benefits themselves. Okay. In terms of that, from a taxation perspective, because of course when you're talking about business, you have to talk about taxation as well. The premium itself is not deductible. Okay, so this is not a cost of doing business, basically. So the premium itself is not deductible. And because it's not deductible, then the benefit is also not taxable. So at the end of the day, if they're paying that $10,000 a month, or they paid off that $250,000 lump sum payment, it is simply not a taxable benefit at all. It's basically a wash in that regard. Okay, so the business loan disability type of policy, very, very popular, primarily for small businesses, new businesses. For example, you just started off your practice, you just graduated as a dentist or as a doctor or whatever, and you're just starting off your practice. You may end up having to borrow substantial sums of money in order to get the things going and everything else, and that's fine, except that should you become disabled, all that comes due as well. So how do you protect yourself against that kind of thing there? So along with your BOE, business overhead expense policy, which we talked about in a previous session, maybe it's a good idea to have a business loan disability policy as well attached to that as well. Okay, and of course, we'll see you next time.